Hello again, this is Alex with MasterChartsTrading.com, and this is a market recap for Friday, February 14, 2020. As always, please hit the like button, subscribe to this channel, and share this video. Your continued support means a lot to this channel and to me personally. So we're looking at a stock rally which just continues higher. All of the major sectors and major indices are hitting all-time highs. IWM hit fresh 52-week highs recently. So this rally is very broad. We'll look at individual sectors. Basically, all of them are, vast majority of them are making new records. So this is a broad-based rally. Junk bonds are also approaching 52-week highs, and they're moving together in lockstep. So overall, this is a good sign for stocks. Treasuries are also close to records, and this is the most concerning thing to me right now as the yield curve continues to invert. While the dollar broke back into the bull market, this could weigh on gold, but I'm not going to cover precious metals this week, but I will cover Ethereum as it breaks back into bull market after a huge run. Okay, so S&P 500, ETF SPY, again new records. So this little dip here into late January really just was immediately bought and not much of a price pressure to the downside. So no matter how many times we're hearing really terrible news out of worldwide, the stock market just shrugs everything off and keeps going. When or if this is going to turn around, it will be pretty obvious on the chart, and we will act accordingly. We will close our long positions and begin opening short positions. But this is just not the time for short positions right now. So overall, I'll be just still looking for opportunities to buy. QQQ also at records. I mean, this is just crazy, crazy move. Uh, Overall, I'm very happy. This actual alert back in June of last year, 2019, and it was good for 34%. So congratulations again. Dow Jones, same general principle. Also, same thing. Last May, alert was sent, and now position is up 17, almost 18%. So, again, congratulations if you're opened. IWM 52-week highs relatively recently, so not much with divergence. It's dragging definitely IWM, and it's been dragging for many months, but is it a big deal? Hard to say. So for now, it's not too bad. And let's look at some of the sectors. Lots of sectors are at record highs. So overall, no divergences and pretty much extremely broad rally. Here is a alert for XLK technology back from June of last year, good for close to 39%. Very nice move. Again, congratulations if you recently opened. XLY, consumer discretionary, up over 19% since our alert in June last year. Beautiful move again. Not much to complain about. XLY is the most economically sensitive sector out there, so this is a definitely a good sign when such economically sensitive sectors are going to records. XLP consumer staples. Some people say that it's a defensive sector, maybe. I don't see it too defensive. Same thing alert was sent here 8th of March last year, 20% move, new record highs. So again, overall, uh, very much a bullish chart. So we're going to continue buying as if there's going to be a pullback. Industrials, XLI, also new records. XLF financials, 52-week highs. So XLC communications services, things like Google in here. So just pretty much all around records everywhere. Couple of standout performers is of course utilities, XLU, as it just again broke to new records. We did trade utilities, or at least I sent an alert back here in January of last year. That alert was good for 29%, and they say utilities don't move as much. They move quite well. So overall, just not much to complain about. Beautiful move, so congratulations. And real estate also, latest alert was in January of last year. And that's 26% move in our favor. Congratulations. So overall, I see no divergences, and generally speaking, when there's no divergences, that's a good sign. So it means the rally in the stocks is broad. Junk bonds. So junk bonds, generally speaking, will move together in lockstep with stocks. Here, junk bonds are breaking out around the same time as stocks back last year. Also, very nice move so far. Right this instant, I saw, I pointed out this drop from the January into late January, and it really never went anywhere. Now again, it's approaching new records, and this is what we want to see for junk bonds. We want to see new records together with stocks, and if they're moving together with stocks, that means more or less things are okay. TLT treasuries, this is a long dated, very secure kind of securities. Moved towards new records. The records are a little bit higher, but overall, uh, if we think about TLT as a defensive play, then we should worry about TLT breaking to new records or coming up to new records. So let's look at the dynamic yield curve again. And this is the look of the yield curve right there. You can see the short-term yields are actually higher than the 2, 5, the 7, and I think the 10-year as well. So once again, we're seeing an inversion of the yield curve. So Federal Chairman Powell will most likely have to again come in and cut the short-term interest rates, as they did already. And let me show you, just a few weeks ago, really, the curve was normal. This is about 4 weeks ago. Curve was pretty much normal, but overall, when the last interest rate cut occurred, I think it was like right sometime in September, if I'm not mistaken. Eventually, the yield, you can see how almost completely inverted. You can see the short-term yields were almost above the 30-year yields back in September of last year, and we came really close, and then eventually the yield curve righted itself as the intervention measures by the Federal Reserve came online. So again, I think it's coming to that. We can see current yield curve again is somewhat inverted. I think the Federal Reserve will again come in and lower this interest rate. So overall, it's a race to the bottom, but the alternative is most likely a bear market. So, for example, back here in 2007, you can see inverted yield curve where the um, short-term interest rates were above the longer ones, and uh, bear market followed. Kind of similar situation happened back in 2000. So overall, right this instant, there's not that much to be concerned about, but it's getting there. Right, let's finish up with Forex. So Forex, you can see DXY dollar index, huge run all of a sudden. There's a breakout where I'm hovering on 5th of February. I put an arrow there as well if you can trade it, but not everybody can trade it. So big move again, and by extension, the euro just collapsed. You can see downward facing purple arrows. I did not send those alerts, but you can see the latest one. If you were trading with my indicators and you can have them on your chart, then you would have had a Just a sweet gain of 239 pips. Okay, that's it for this week's recap. So as usual, please head over to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on sign up and sign up for one of the services. Um, Sign up for one of the services here. I have 3 services: alerts, which is basically a newsletter. So it's about $25 per month. You get alerts about all kinds of stocks and various securities that we trade, including Forex and Bitcoin, uh, and various stocks as well. Oil, natural gas, we also trade that, and lots of different stocks. You can have the same trading indicators, these lines on the chart, green, blue, red, and yellow line. You can have them on your chart as well. So just sign up on my site and I'll explain how it is. Sign up on MasterChartsTrading.com. Excuse me. And of course, the best deal is to get both alerts and the indicators. So sign up for that. Right now, it's still on sale. 33 per month if billed yearly. I think it's a great deal because not only you get to trade on your own with your own trading indicators, you also get tons of examples that I send out. All right, that's it for this week's recap. If you have any questions, please send them in. Thanks for watching. Again, don't forget to like this video and share it with others. Bye-bye.